Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Why don't you set this conversation up a little bit and kind of get everybody up to speed?
Okay. Well, first of all, just by I don't know if we're going to go with a show of hands here, but you can certainly chime into the chat. How many of you use risk graphs every day? Got to rely on, yeah, okay. How many of you are not very familiar with risk graphs? Still learning. Okay. I actually am I'm kind of the right brain visual thinker types. And so when I first started learning options, they really started making more sense to me when I could see it on a risk graph. So, a risk graph, just for those of you who are brand new and again just getting started, basic anatomy of risk graph. Here's a clean risk graph with nothing on it on Bitcoin, but it's just $0 is break even. Then the price of the assets down here, you can see this would be the price of Bitcoin all down here. And so if you were to go buy Bitcoin, whatever the current price you got, that would mark your break even point, the price of purchase. And then if you bought it long, your graph would show you profits to the upside. So here you can see plus 0.5, plus 1. It goes down, minus 0.5, minus 1. And you can actually, use the risk graphs to track any position, any posture. It's a calculator as well. A risk graph is also a calculator. And there's some really, really neat functions and capabilities in here. And so I thought I would run with the chart. My baby boy pick this week was Baidu. And I'm not sure if Baidu is going to be heading up or down. But I thought we could talk about it, in this particular situation where, again, it's got kind of that kiss goodbye setup right here, where it's got the double top, the breakdown, the rally, and then a possible kiss goodbye. And not quite as pretty as the oil chart, but pretty darn good looking here. And you got a lot of options on a stock like Baidu. And when you go to the risk profile here, I modeled out a back ratio, which is just kind of a fun and interesting graph. And what a back ratio is essentially you're selling an option. There's two kinds. There's call back ratios and there's put back ratios. It's a bullish speculative posture when you do a callback ratio. It's a bearish speculative posture when you do a put back ratio. And essentially it's a simple strategy. I wouldn't say it's simple. It's kind of an intermediate strategy to advanced strategy. I wouldn't say it's super rocket science or anything like that, but we just sell one option to get the money to pay for more options. So you sell at least one option to buy two or more options. And it's just that simple. So in this example, what you can see here is I've sold one in the money put, and that gave me enough to buy 5 out of the money puts and to leave $3.57 left over as a credit. So, and in the graph, you'll notice that the graph has got a very interesting risk-reward profile where, hey, if the stock goes down, you can see that there's a lot of profits above zero here. That if the stock takes a nice big drop and it drops down, below 220, 210, 200, you'll have a pretty good rate of return. Make a couple $1,000 bucks. If it runs up, you'll notice the graph's got a little bit less risk to the upside. If it runs up, you'll notice it doesn't vary too far from zero. And if, in fact, if it ends up running up above around 275 or so, you actually walk out of the trade without losing any money. You'll actually make some money. Now,